In this video, guys, we're going to look at 5 trading quotes that are valuable right now. Stay tuned. Hey traders, warm welcome to you. So, beauty of reading books or watching an article or reading articles, just say watching videos or anything where you can kind of dig into how other traders do things is that you sometimes see 1 or 2 little quotes that are so meaningful, have a lot of deeper meaning to them, that when you sit and ponder them a bit more, you think, hey, you know what? That is something that I really want to remember for the next week, month, a quarter of trading, because it's so pertinent to how we're trading now. And some of these really tick that box for me right this moment. So start with the first one, guys. First one is every trader has strengths and weaknesses, and that's from Michael Marcus. So he's saying here that some people are very good at running winners, some people are good at cutting losers, some people are good at catching the end of trends, some people are trend trading. You get the idea. And in fact, I think it was Paul Tudor Jones who actually said, hey, I'm very good at getting those turning points in the market. This will be years ago rather than now, but he said he was very good at that. He's just not very good at getting the meat in the middle. Then you speak to other trend traders who say, hey, listen, I'm not interested in the first third, I want the second third and not the final third. So everyone's got their own strengths and weaknesses, and the kind of takeaway from that for me and you is to say, okay, what are your strengths and what are your weaknesses? Again, it's being very objective and looking at it all from a completely neutral perspective and going, you know what, I'm very good at cutting losers when they're not working. I'm very good at identifying the right markets. I'm very poor at holding on to stocks as long as I should do. I'm very poor. And so, when you're focusing on your strengths and just trying to, as long as the weaknesses aren't really debilitating, you can focus on your strengths and become better at picking the right stocks or better at finding those turning points. Number two, guys, is what seems high and risky to most traders usually goes higher. William O'Neill. Very pertinent at the moment with the current conditions. When stocks are, some strong tech stocks are just absolutely ripping right now. And whenever you're watching this video, it will be the same. And if you flip on his head, if you're watching we've got a bear market going on, same kind of thing. The stocks that are the worst often will stay bad for a long period of time. The stocks are the best will stay, and it's generally people who are fearful of buying them because they're too high. They end up missing out on the thing to squeeze. And a great example, of course, is Tesla. Tesla, everyone thought it was way too high at 200, 300, and then just rips up and it's trading, whatever it's trading at now, 850. So same kind of thing. This happens time and time again, guys. Third thing is if you personalize losses, you can't trade. Bruce Kovner. Very important through all parts of trading, but definitely very something to really remember. If you think about losses too much and you take them too much to heart, you'll never be able to trade successfully. You have to be able to categorize them however you do in your mind, that it's just the cost of doing business. It's not a loss. I'm expecting to have drawdown from losing trades, and it's a shame we call them losing trades, but we do. I know one trader who just calls them expenses, and that's just how he frames it in his mind. So there's those, and there's the winners. And the thing is, if you're running a business, no one likes paying their rent, no one likes paying their rates, no one likes paying their energy, utilities, all the costs. No one likes it, but they recognize they have to do that to be able to make the profit. And it's the same with trading, guys. You're never ever going to be able to make a profit consistently by making winner. You have to have a finite number of trades and a small chunk of losers in that, just like a bookmaker would do. On the reverse side of making being a bookmaker, he's going to have losing bets he has to pay out on, but he's hoping to make enough chunk in the middle to make it worthwhile for him. Number four, watch the market leaders. Jesse Livermore. Super useful at the moment. And again, if you're in bull market, bear market, whatever conditions, but right now market's chugging up tech specifically, and there's a kind of massive void in between some stocks which are right at lows after the coronavirus hammering, and some stocks which are right at highs after it. V-shaped reversals and are right at highs. Others are sitting right at lows, and airlines and Amazon is kind of a good example. But again, whenever you're watching this same kind of thing, you will always have this disparity between stocks. So you look at the market leaders, you trade the market leaders to the long side. In fact, I've got a video, may well be out already. If it's not, hit the subscribe button to make sure that you are notified. If you want to be notified, you can hit the bell as well. You know that when a new video is coming out. And one of the things I do talk about is how picking the stronger stocks when the market's rallying gives you more juice and kind of insulates you a little bit from declines. And I know that recently because definitely the last week, one of my go-to strategies has to be buying strong stocks and staying long with strong stocks, waiting for that sweet spot, waiting for that trigger point, and buying strong stocks in a strong environment, and selling weak stocks as well. And that's worked quite nicely because, you know, when the market's chugging on, those strong stocks are ripping, and you're able to take a couple of days run out of them. And when the market stagnates, the weaker stocks are grinding lower. Now, that may change, but it never ever changes really when markets are moving, even under normal conditions. You know, strong stocks will stay strong for much longer than we think they do, and weak stocks will stay weak for much longer than we think they do as well. So watching how the strong stocks are behaving also can have an impact on the overall broader market as well. So fifth and final one, guys, is markets are never wrong, but opinions often are. How pertinent it is right now, when many people are seeing the economy being devastated, many people are seeing things struggling, but actually we're seeing several stocks ripping to highs. Like I say, we are seeing some stocks at lows, but regardless of when you're watching this, regardless of your opinion on gold, regardless of your opinion on crude oil, regardless of your opinion on anything, it's the market that's right, and it's not you. You need to align yourself with the market. It's okay having an opinion and a bias and trading around that, but when you've been shown to be wrong, you need to reassess. Now, you may not change the bias, but it doesn't necessarily mean you have to commit money to it. Just because you think it's a short and it's grinding high doesn't mean you have to be stubborn and go short and keep going short and getting stopped out. Wait for your entry. Just because you've got a bias on the long side or short side and the market's not confirming it yet doesn't mean there's a problem. It just means you have to wait until you get the opportunity to. Yes, you might want to shift biases. That's an option too. Or you say, wait until I see some kind of trigger to help me get short or get long or whatever it may be. So 5 top trading quotes that are valuable right now, guys. If you've got any more, stick in the comment section below. And while you're down there, check out our channel sponsor. A link is in the description. Take care. Bye-bye.